Good morning. My name is Jeffrey Halley. I'm a senior market analyst at Oanda, and I'm filling in for Craig Earlham over the next couple of months while he's away on paternity leave. Let's just kick straight into it and look at what I consider to be some of the more interesting things going on in the markets for the rest of the week. The first chart you're seeing is for a company called Rocket Companies, and that's a mortgage company based out of Detroit. Their price doubled yesterday to around $41.60. And that was being driven by this Reddit army who started buying call options, much as they've been doing with GameStop and silver. The price rocketed, as I said, 100%. I think for this particular company, though, they may have chosen the right fight. For a start, Rocket Companies has been producing some exceptional results over the last 2 quarters and have announced a special dividend. Secondly, and most importantly, 45% of Rocket Companies' free float is out on loan to short sellers. So there's a lot of shorts in the market. So I do believe that we could actually see more upside action from this fringe stock that most people had not heard of before yesterday, basically. Let's talk about the S&P and the NASDAQ. So I'll call up an S&P chart. Although we've seen a rally over the last 24 hours, it's been what I would describe as a schizophrenic week where the market has been really chasing its tails. On Monday, we were talking about global recovery and stock markets rose. Yesterday, it was bubbles, bubbles, bubbles everywhere. Stock markets fell. Today, it's the vaccine-led recovery after President Biden announced that all Americans would have access to a COVID-19 jab by the end of May. Having said that, though, I don't think that necessarily the stock markets are out of the woods yet. This chart shows a long-term support line rising from bottom left to top right. It goes almost all the way back to March 2020, and it comes in at 3,800. If the non-farm payrolls outperform on Friday, I'll touch more on them later, we could see the S&P fall through that level despite a good number, because I do believe it will push US bond rates up yet again. If we look at the NASDAQ now, the NASDAQ's quite interesting because it's actually broken long-term support that runs from the March 2020 capitulation lows, and it's been trading each side of that line for the last few days. That line today is at 13,325, and a series of daily closes below that line would target initially the 100-day moving average, which is at 12,600. But if we start getting a real capitulation market going on, we could see the NASDAQ be set for a large pullback, and that could go all the way down to its 200-day moving average, around 11,600. Other events this week include OPEC tomorrow. We can see a Brent crude chart right here, and we can see that oil prices have fallen quite dramatically. WTI has also fallen through the $60 a barrel mark. Brent is now trading around $63 at the moment. The market has repositioned itself and expecting that that OPEC Plus will reduce their production cut quotas tomorrow. Now, if oil keeps falling tonight, that may not happen because OPEC Plus has now moved to a monthly cycle of decision making. So they're a lot more dynamic now. So I think we should be very careful treading and being overly bearish on oil at this point. The market dynamics have clearly changed in oil anyway, and I expect it to rally through 2021. But OPEC Plus could be setting up the market for a big short squeeze if they get too bearish tonight. Finally, we have ADP employment tonight in the United States. If that number comes out above 200,000, we could well see the non-farm payrolls explode to 300,000 or more on Friday. That would almost certainly push up bond rates, and we may see the US dollar rally aggressively and push stock markets lower. Thanks very much for listening.